there, Maverick Traders. It is another weekend. Welcome to the trading room. This is Robb Reinhold. And look at this. We are in the second to last week of the year. I cannot believe it. Let's jump into it. In this session, we're going to be going over the week, taking a look at the news. We'll take a look at all the broad markets and commodities. The big question is, did anything change this week? Did we get a change in scores in the broad market? Did we get changes in scores in the sectors? And then we're going to be looking for trading setups based on those sector strengths and weaknesses.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
I introduced this last week, and we're really excited about it. We've been doing work on this for the last 8 months. We put together what we're going to be calling the Trade Collective, to where we are going to trade together in a real-time trading group, focusing on options trading, spread trading, and basket trading. Now, the way it's going to work is we're going to be making real-live trades in a real-live market, in a real-live options account, and we're going to have a real-time journal to where everyone can look and see exactly what's going on at the time. We are going to be starting this up on January 2nd. So January 1st falls on a Monday, so Tuesday night we'll be holding our first session. Now, the way it's going to work is the first week we're going to introduce everyone. We're going to introduce the methodology we're going to be using. We're going to be introducing the position sizing rules and also all of our exit rules and everything. So you should know exactly how we're going to be doing this. And then what we're going to do is we're going to start that week. Every single Saturday for the Trade Collective, we're going to be sending out another video separate from the trading room where we basically do step by step, where we say, okay, these are the trades we're looking for. And again, we're going to make this to where it's very, very systematic, where it's like, okay, I already know I need to look for a healthcare stock that expires in 2 weeks, and I already know I need it to be a bull call spread. So that's how we're going to handle this, where we're looking for these setups. We're going to send that video out on Saturday to the group. And then on Monday morning, we are going to meet 15 minutes before the bell opens. And then we're going to discuss, okay, these trades that we're looking at over the weekend, have they gapped up too much? Do we need to make any adjustments? But we're going to make those trades live in the market. So you're going to see us actually put in the orders. We're going to see us try to get better fills on our options spreads. And then on Friday, we're going to do basically the same thing in reverse, where we're going to be talking about the exits. So do we have any trades that are exiting on that Friday? Do we have anything that needs to be adjusted on that Friday? Do we need to roll something over? Do we need to take something down? So every single Monday morning is going to be live, and Friday, 2 hours before the close of the market, we're going to be live. And then we're also going to be building some additional master classes, just covering just various topics of trading. Now, the way we're going to do this is that we're going to open up 1 month for free for all of our Maverick traders. So the whole first month for Maverick traders is free. You guys come check it out. After that, if you like it, it is going to be an additional $99 per month. If you think it's going to have value to you, great. We'd love to have you with us. If not, no big deal. You just keep doing your thing. No problem whatsoever. Let's jump into our trading room. I'm going to be sending out more information this week via email, and you're going to be hearing a lot more about this as well. We will be opening up the registration for this the last week of December. All you need to do is opt in. You'll get the first month for free. And then look, if you want to sign up for it after that, there's going to be additional steps where you have to then put in your credit card, opt in. If you just want to check us out for a month and then you say, okay, I don't want to do it, or you forget about it or whatever, look, nothing happens. You just won't be part of the group. All right, let's get into what happened last week. So last week's news, we had the markets go parabolic. I'll show you a chart here in a second of what I mean. This happens every now and then. Markets going parabolic are very, very exciting. They typically happen on the upside due to shorts being squeezed and squeezed and squeezed, and finally they have to bail. And on the other side, when they go parabolic, it means that you've got like margin selling and margin pressure. So it's the same thing on both sides, where basically everyone who had been holding on, got pushed out. And that's what happened this week. What was the impetus of that? Well, look, we are already in a very bullish market, but we had the Fed meeting. The Feds kept rates of 5.5%. But one of the things that surprised the market is that there are 3 rate cuts planned for 2024. Now, again, they're not planned, but they're forecast. They call it the dot plots. The market did not expect this. So the bond yields cratered, the dollar cratered. This was really good. And then we got a really good retail sales report to where there's really just this Goldilocks situation. And I used this term last week, Goldilocks. If you aren't familiar with the story of Goldilocks and the 3 bears, she goes in, there's some soup is too hot, some soup is too cold, she finds the one that's just right. That's what we mean by Goldilocks. This is Goldilocks right here. So let's take a look at what happened last week. We had the CPI. CPI came in, the core came in as expected. The headline came in a little hot, but look, a little hot. It was supposed to be 0, and it came in at plus 0.1. Plus 0.1 month over month is fantastic. Year over year, 3.1. The Fed has got it exactly where they want it. And then we get the PPI that comes out weaker than expected. So again, the PPI is a little bit... The PPI, the components that go into everything, is coming down faster than consumer inflation. And then we get this retail sales report I talked about. Just a dynamite report. It was supposed to be negative. It's positive. Everything, again, this is Goldilocks. That's why the stock market is doing what it's doing, because this is the perfect situation for the market. We've had this inflation fear. The Fed has reacted. It looks like the Fed got it right. Our economic growth is still okay. Look, it's not great, but it's not recession. It's still okay. That's why this market is doing what it's doing. Let's take a look at some of the trades we shared last week and how they did. First one was Roku. And we talked about Roku, and we didn't want to be too aggressive. We wanted to do a diagonal call spread with the 105 target. And you can see Friday, it got whacked. It got absolutely whacked. So we'll see if it can come back. This trade has some more time. But at this point, it does not look like Roku is going to be a winner. We come over here to Vertiv Holdings. We liked the breakout. So we went mildly long on this one, and the stock went up for like 1% for the week. So the stock is up 1%. We still have some time on it. Had a little 2-day pullback, but had a decent candle on Friday. Still looking just fine. Now this one was absolutely nailed. We had a 55 calendar spread, a January-December 1 week 55 calendar spread, and you can see it closed at 55.09. So this is just spot on, a sideways trade that came in very, very nicely. So well done for everyone that got on that one. And then we had a mildly bullish trade on Microsoft. And you can see Microsoft this week just didn't do anything. It just kind of went sideways for the week. It was actually down 1% for the week. So this trade has a mild loss on it. Look, nothing is broken technically, but it is a little problematic that it did not rally with the rest of the market. It just did not. What we saw, a lot of the big cap tech stocks that have been the main reasons for the rally, they're taking a break here. I actually have a trade based on that premise here in just a little bit. And then we had a short on Valero, and you can see that the last 2 days of the week, Valero decided to jump up. Nothing happened technically. This is still in its low base, but our play was that it was going to stay in the bottom of its base, 120 to 125. And you can see it cleared out of 125. So this one was a max loss on VLO. Let's take a look at the market and let's go ahead and score everything. Now, before we jump in here, I've been having this conversation a lot lately. And I've been bringing this up a lot on the trading rooms that I have a group of traders that are still disbelieving of the market. They're still bearish. They're still, how could this happen? How could it be so strong? I don't understand why it's so strong. Let me tell you a little story, and I'd love to tell the story. It might be my favorite one to tell. Joe and I have been trading together since 2000, so 23 years. And I'm the one who introduced Joe to trading, and I've been trading for about 3 years, and Joe is new. So Joe was a newer trader, and we were kind of arguing about a trade. And I said, Joe, and I laid out this plan of why this trade was going to work out. It was very intellectually, just had great arguments. And I said, Joe, I know I'm right. And Joe looked at me and he said, I don't care if I'm right. I just want to make some money. And I stopped and I realized I'm building this argument like I'm going into a debate. And I was ready with my argument and I was ready with my debate. And I realized I didn't really even think about where the stock was going or what the trend was or anything. And I realized Joe didn't care about being right. Joe had no ego. He just wanted to make some money. I love this story because from here on out, or from there on out, I told myself, don't write up a big long essay on all the reasons you're right. Just get on the right side of the market. And so I've been having this argument with a lot of traders that are bearish or they're fighting this market. I'm like, look, I could write a whole essay agreeing with everything you just said. It doesn't matter. The market's going up. And the ones that didn't adjust to that, they got their face ripped off. And they were actually the big reason for the move. As I said, we went parabolic this week. Dow up 3%, S&P up 2%, NASDAQ up 3%. Take a look at this Russell. I talked about this Russell. Last week I said, look, everything's had a good run. The Russell has some catch up to do this year. It's way underperformed, and it's way underperformed because of high interest rates. High interest rates are bad for small cap stocks. Interest rates coming down are great. The Russell up 5.5%. I still think the Russell has 2 weeks to play a little catch up. Oil and gold, just hanging around, being mildly positive. That's about it. I want to look at this chart. So I used the term going parabolic, and that's what happened here. This went parabolic. Why does this happen? Again, short squeezes. So on the flip side, when something goes lower like this, it's because of margin selling. It's because of panic selling and margin selling. This is literally panic buying and margin buying. Shorts being forced out of the market. And so what happens is people were already buying. And I talked about how the bid was really thick, how no one was selling. So people were already buying. You add in short covering to all the people buying, and you get this parabolic move. Now, parabolic moves typically end in the way they came up. Parabolic moves up typically move in a parabolic move down. However, where we are right now, think about it. We're in the last 2 weeks of the year where volume and volatility usually dry up a bit. There's people, if they sell now, they have to pay tax in the first quarter. If they sell in January, they can defer their tax for 15 months. I just don't see any reason why we're going to have selling over the last 2 weeks. Look, we could pull back 1-2%. I mean, heck, we could pull back to 4,600. We could pull all the way back to 4,600, and that's still a perfectly fine uptrend. It's not until down below 4,600, like down into the 4,500, where all of a sudden, technically, we're starting to get in some trouble. I just don't see any reason why this market falls. I just can't really see it. Here is the small caps. This is where, again, I think there is still some gains to be had in small caps. I'm not ignoring the fact that the market has gone up like 15% in 6 months. I'm not ignoring it. I do think that most of the gains are already in the bag. Okay? So if you think we're going to go up another 15% from here, you're nuts. Could we go up another 1 or 2 or 3? Sure. Could we go down 1 or 2 or 3? Sure. But this market is kind of out of gas at this point. That being said, there are parts of the market that are still, I'm never going to use the term undervalued, but they've been underparticipated. And now those are playing some catch up. And this is an area where I do think we've got some catch up to do in the small caps. And this one here, look, for any of you who are still trying to be bearish, we were at 5% interest rates. We're at 3.9. So imagine, let's just go back a month ago. And I told you I can see into the future. And in December, interest rates are going to fall to 3.9%. If I ask someone who is bearish, what would happen to the stock market? They'd say, well, geez, if that happened, the stock market would probably have a massive rally. Yes, if I went back in time and asked someone who was bearish in the 1st of November that I knew that interest rates were going to go to 3.9, what do you think the stock market did? They would probably tell me, oh my gosh, there'd probably be a really big market rally. And yet here they are saying, I don't know why the market's so strong. This is why. This is 100% of the reason why this market is rallying like it is. And here's a question. Are interest rates going to go back up to 5? Not based on what we heard this last week. Not at all. That's why I don't see any sell-off coming. I just don't see it. There's buyers out there. And again, we're likely going to have a melt up. And I talked about this last week. I'll talk about it this week. If no one's selling and there's enough people buying, it just keeps going higher. We don't need to have pullbacks. We can have this melt up. Let's talk about, I think, the big news this week. And it's not in the US. The Bank of Japan has had ultra low interest rates for 3 decades. And back in 2015, they started doing some financial maneuvering where they were pushing down the long end of their bond curve. The government was literally coming in and buying the front end, selling the back end, flattening the curve to make sure the interest rates stayed low. It looks like this is coming to an end. And this has been a really big trade around the world. And on Monday night, they're basically going to announce if it is coming to an end. If it's coming to an end, the Japanese yen has a lot of upside. The Japanese yen has lost about 35% of its value in the last 16 months. That's a huge move in the currency market. That is going to be a big move. If the yen takes off, the yen and the dollar right now are inversely correlated. So if the yen takes off, the dollar is going to fall. What does that do? That pushes interest rates lower, that pushes gold higher, and that pushes stocks higher. So I do think this is the big news of the week. Typically, I don't talk about anything outside of the US when we deal with US stocks, but I think this is a big enough one we talk about it. And of course, I've been talking about this for 3 weeks, 4 weeks. December is seasonally strong. We've got so many seasonality patterns in the favor of bullishness. Other than the Bank of Japan, I don't really see anything of really any worry here. Typically, yes, I would talk about the PCE price index. But look, inflation's done. Like, even if we get this one reading that's hotter than expected, it doesn't matter. There's so many out there that are showing not deflation, but slowing inflation. And if this comes out lower than expected, it's only going to push interest rates lower, the dollar lower, gold higher, stocks higher. Again, it's right now, this is the story in the market. And if you are just looking at the stock market and you're not seeing what's happening outside of it, you're missing it. And that's probably why you want to be short, because you're not looking at the whole picture. You're just looking at it's gone up so far, so fast. Yeah, it's gone up so far, so fast because interest rates have come down so far, so fast. We're at a +3. We're not changing it. There's nothing in the chart that's changing it. I think we get a melt up. I think we get an up week again. I think we are out of gas, though. And I want to keep saying that. If you're hoping for another 5-10%, I think it's already happened. I think the gains are going to be a lot smaller from here on out. Let's go in and check on the sectors. We're going to score the sectors one by one. I'm going to go through these pretty quick because nothing really changed.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Nothing really changed. We are already pretty much at a +3 on everything but a couple. As you can see, the best performing sector this week, real estate. Why real estate? Interest rates. Materials had a nice week. Why? Because gold had a nice week. And the miners are in this sector, did very well. What underperformed? Comm services. Comm services did really poorly this week. I actually had them at a +2 last week. They did not participate. They were the worst sector of the week. Let's go through and rescore everything and make sure we've got everything on the board. Utilities had a nice little pop and then proceeded to give it all back. So we're at a +2 in the utility sector. Looking at communication services, you can see it just didn't really go anywhere. So we're at a +2 on that as well. Last week, we were at a +3 on real estate, and real estate was the best performing sector, and it maintains its +3. Could it pull back from this run? Sure, but it's still a +3. I'm a buyer on any pullbacks in real estate. Healthcare had the same thing, did have a little bit of a pullback on Thursday, Friday. So again, you want to be looking to be a buyer. Let this pullback come in, and then it's really showing you healthcare that was at a +2. Now at a +3 is a strengthening sector. So this is an area that I am going to be looking at this week. Coming over here to industrials. Industrials was a +3 and it just said, hold my beer. I'm going up every single day this week. Industrials was a great sector this week. So was the financial sector. Financial sector was also great. Just like I said, I'm going up. Even the days that it gapped down, there were still more buyers and sellers at the end of the day. This is what I'm talking about, that there's a lot of people on the bid. Maintaining a +3 on financials. Consumer, we were at a +3, and guess what? Stays at a +3. 5 green candles for the week. But as you can see, I want to point out, we're losing a little steam. We had some gas in our tanks on Monday, Tuesday, Wednesday. Thursday, Friday, we're again losing a little steam. That's just telling me, okay, we've probably had our run. We probably need to cool off for a bit. Here is tech. Was it a +3? Maintains a +3. Had a really nice Friday. Stronger than any other sector on Friday. And materials had a really nice week. We were at a +2. We are now up to a +3 on materials sector. And let's check in on the poor energy sector. Even that had a little bounce this week. We bounced back up to that lower 20-day moving average. So instead of a -2, we are now at a -1. As I said, not a lot of change. This is where we were last week. Pretty much everything stacked up on +3 except for utilities, healthcare, materials. And healthcare materials said, hey, we want to be with the cool kids. And then energy went from a -2 to a -1. But the week before, it went from a -1 to a -2. As you can see, it's just hanging out down at the bottom of the range. This is where, again, everything's bullish at the moment. Everything's at a +3. This is where, again, the markets are telling you the rally's on, and the rally's been on. The fact that these are all the +3, the rally's been on for a while. Now, what is typical, people say, oh, then this means that the rally's almost over. It might be. I'm fully aware that we are deep into this market rally, and we might be done. But I'm not going to start shorting it. I'm not going to stop buying it. I might stop buying it as aggressively, but I'm not going to stop being long. I'll just be long less aggressively. How about that? Don't bet against this market. People have been trying, and they've been eaten up. Let's go in and look at some possible trades. And look, I only have 3 trades for you. We are going into the last 2 weeks of the year. I'm going to be slowing down my trading a bit just because it's holidays and I want to focus on other things. And also, this is the big reason that, most of my trades I do are 2 to 3 weeks out. I have very good clarity for 2 weeks. I'm very confident being mildly bullish for the next 2 weeks. Do I have confidence in the first week or the second week of January? I do not. So why would I make trades today when I really have no visibility for 3 weeks out? I'm going to be just curtailing my trading a bit, and I'll probably pick up the trading again in January when I see the price action. Let's go into our first trade in real estate. It's a great sector. if interest rates continue to go lower, then this sector is probably the best one out there. All right, now I actually have a trade on this. This is a trade. I did a diagonal call spread on this a few weeks ago. I did a 200-210 diagonal call spread. So I did a 200-210. And today the short option expired. So I bought back the short option for about $2.40 before the market closed. So I am sitting in just 200 calls for January. I really like this chart. I really like this chart setup. If you're still in it like me, great, just maintain your original position. But I do think that there is a good opportunity for some trades here. I think this trade right here, just a straight $10 bull call spread. The stock's at 212.15, so you're probably going to pay about $3.50 for this. So you're going to get about a 2-to-1 risk reward if it does go up to 210. So you're playing it from here, basically 210 to 220. If it goes up above 220 and stays there by January 19th, that's going to be a nice 2-to-1 on a risk reward basis. So AMT, American Tower Corporation. Healthcare was a sector that was +2, moving to +3, so it's strengthening. I need to get some more exposure. I had a trade in Cardinal Health, CAH, that was looking great until it got some bad news on Thursday. And ended up going from a max gain to a max loss, but that is why we position size everything for max loss with proper position sizing. I want to get back into healthcare. This is CRISPR Therapeutics. Now, I want you to look at the scaling on this. And when I say scaling, I'm really just pointing out volatility. Look at the range of this. 36 to 78 is the range. So this thing has moved over 100% over the last 2 months. So we're talking volatility here. Whenever we talk volatility, we have to understand volatility equals risk. This stock will most likely be in the 50s or in the 70s or 80s in a couple of weeks. That's just where it's going to be. Which one? Nobody knows, but we are going to make a bet that it's higher. Because this is more volatile, I like to use vertical spreads. Diagonal spreads with volatility, they can become a little trickier. With a vertical spread, what happens is the long leg and the short leg cancel each other out. So you really have very muted effects of volatility. So this one I'm looking at is the 60-70. So we're taking a look here. This is going to be the play, 60 up to 70. If it's below 60, it's a max loss. If it's above 70, it's a max gain. It's a very simple trade. You're probably, again, going to have to pay about $3.30. That's giving you a 2-to-1 risk-reward ratio. If it's below 60, you lose $1. If it's above 70, you win $2. Again, very straightforward on these vertical call spreads, and it really is good when you're dealing with volatile stocks. And then my last trade, technology, I needed to find some sort of sideways. And as I said earlier, we're starting to see the Googles, the Metas, the Nvidias, the Teslas, the Microsofts, the rally's broadening out, and we're not seeing them run. So I took a look at Nvidia and I said, okay, I want to find one of these that is not looking like it's going to break out. So Nvidia, it definitely is not looking like it wants to break out. You can see right up here at 500, it looks like there is some pretty serious resistance. The question is Nvidia going to break out and run higher by the end of the year? Now, my premise is that all these big cap tech stocks that are already up, like Meta is up like 140% for the year. I have no idea what Nvidia is up. I'm actually going to look that up right now. Nvidia is up like 176%. So the big question is, can these huge winners over the last 2 weeks, are they going to get new money at the end of the year? My premise is no. My premise is the money is going to go to the small caps, the stuff that's underperformed a little bit. But I don't think anyone's going to sell. No one's going to sell their gains and incur capital gains when they can sell it in January. So I'm looking at this saying, hey, you know what? I don't think this thing falls. I actually think it creeps up a bit, but I don't see us breaking 500 and running up to 520, 530 by the end of the year. I need to get some sideways theta exposure in my account. Let me take a look at some of these large cap techs. So I'm looking at the 485. Let me get that box in the right place. The 485, 500, 515. I want NVIDIA to close as close to the middle of this box as I can. I'm giving it 5 days. I'm giving it 5 days. I think NVIDIA is going to creep up a little bit. I don't think it breaks 500 and runs. If it does exactly what I thought, it's going to be a really nice gain. If it falls apart or if it shoots up past 515, that's why we always position size for max loss. If you want to make your target window a little bit bigger and give yourself some more time, you can go out to December 29th and just make your window a little bit bigger. That's it. If you have any trades you want to share with the rest of the Maverick group, you guys know where to go. MaverickTrading.com. Log in to the members area, jump into the forum. Love to see activity there. Let's go ahead and wrap this up. I said this last week. I'll say it again. This market is flat out bullish. It just is. Look, I know it can do anything, but I know what it's doing right now. And it's just flat out bullish. The market is closer to the end than it was last week. I know that's dumb to say, of course, but it's the truth. I think there's less and less gains over this next 2 weeks than we've seen over the previous 2 weeks. I think we're looking at, a 0.5% gain every week, if that. Maybe it's totally flat. So I think if you're going to be trading over the next 2 weeks, I think you want to dial back your bullishness and go more theta and slight bullish delta. I think you want to back off your delta quite a bit on things, but you definitely don't want to go short. You definitely don't want to be short. If you want to be short, just wait till January. That's what I told my traders like 3 weeks ago. Hey, why are you being a hero here? Because they're like, Rob, it's going to fall apart in January. Look, yeah, just wait till January. That's fine. Just wait till January. All right, that's it for me. Thank you so much. Everyone have a great weekend. Take care. Goodbye, everyone.